Good evening, everyone. I wanted to explain the dollar bubble movement today. In case you were wondering what exactly happened, well, we had the inflation data, which was a beat, and so we had to be careful, and it was good that we were careful. So, what happened to the USD? It was over here, and what that told us is that the retail guys were long, and they added long. And so, what happened when the data came out? It was a beat, and so the dollar it performed well. And what normally happens, it's very typical, is for the retail guys who went long and were already existing long, what happened is that they took profit. And so by taking profit, that means that they're less long and they're more short. And that's bullish for us, okay? And that's why the dollar bubbles come over here into the strong buy section. So I will try and attempt to draw what happened. So this is the Euro USD. They went long here, and it had to sort of go sideways for so long, and it caught them into like a trap, and it finally fell, and you can see what happened. So the dollar bubble was over here, and so what happened is that when the data came out, it was good data, and so what happened is that they took profits, and even though um, they were profiting, if they held, it would have been a good move, but they just took profits too early. And by doing so, it moved the dollar bubble. Because if they're less long and they're taking profits, they therefore become more short. And what happens is that the bubble got larger, and it got larger. And so we're over here. And so now the dollar is a strong buy. From the pure logic that the retail guys are, they're kind of they are very counter trend, but what they do something very silly is that they don't hold on to their profits and they let their losses run. Now, if we look at the euro, where is the euro? Wow, okay. So the euro is way over there. So really, the euro USD should be falling because of that logic. The euro CAD and the euro Oz should all be performing quite poorly. So that's just the logic there. So I think, if I remember right, the euro could have been over here, and it went across. So of course, it's the same thing. You see, they just held on to the losses. So this one is they took profits too early. This one is they held on to the losses. Okay, and so that's the euro USD. So we'll be getting the euro USD signal, and I'm going to trade it tomorrow. I'm going to publish a signal, but we're going to use probably a pivot for our stop loss. So that's now buy, and that's now sell. But what we want is the USD to stay here, because the retail guys are very keen on buying the dollar, and when they buy it, then it becomes less of a sell, less of a buy, because we want to do the opposite of those guys. So hopefully it helped. Just a little bit of logic there. That's what happened with the USD today. They took profits too early, and they're less long. Because they're less long, they're more short, and so therefore it's more of a buy. And the euro is just a case of them holding on to their losses. As we can see in the euro USD, they were long. Price fell, but they're holding on, and they're not only holding on, but adding long. And I guess for trying to break even, they could be averaging to try and get them out at break evens, but that's actually quite bearish. When we see a divergence like this, that's like a heads up. So that's just a little summary of what happened today. Hopefully it helps, and we'll keep an eye on the dollar bubble tomorrow, and we can use it for a signal. Potentially we can have a look at Euro Oz or Euro CAD, but remember we've got the Bank of Canada tomorrow interest rate decision. So I'll speak to you guys later.